There's a country that can print money to pay its debts, and the world just accepts it, not because of threats, not because of force, because 70 years ago, in a room full of tired diplomats, the United States convinced everyone that this was the only logical choice. And for a while, it was. This is the story of how America built the world's reserve currency, how a piece of paper became more trusted than gold, and why that system, the one holding the global economy together right now, might be more fragile than anyone wants to admit. Let's start with a simple question. What makes money? Money? It's not the paper. It's not even the numbers in your bank account. Money works because we all agree it works. The moment that agreement breaks, so does everything else. For most of human history, that agreement was based on gold. Gold is scarce. Gold is physical. Gold doesn't care what politicians think. If you wanted to trade across borders, you traded in gold, or in currencies backed by gold, which is basically the same thing. But here's the problem with gold. There's not enough of it. By the mid-20th century, the global economy was growing faster than anyone could dig gold out of the ground. Countries needed a way to trade, to borrow, to build. And gold, for all its reliability, was slowing everything down. So in 1944, with Europe in ruins and World War II still raging, delegates from 44 countries gathered in a resort town in New Hampshire called Bretton Woods. Their mission: redesign the entire global financial system. The Bretton Woods Conference wasn't about peace, it was about power. The British wanted to maintain their empire, the Soviets wanted control, and the Americans, well, the Americans had something nobody else had. They had half the world's gold reserves, they had the only major economy that hadn't been bombed into rubble, and they had a proposal. Instead of every country holding gold, just let the US hold it. Everyone else could hold dollars. The dollar would be as good as gold, because the US promised, cross our heart, you could always trade your dollars for gold at a fixed rate. $35 per ounce, locked in, guaranteed. It was a clever deal. Other countries got the stability of gold without the hassle of moving it around. The US got to print the currency everyone needed, and for a couple of decades it worked beautifully, except for one small detail. The US started printing way more dollars than it had gold to back them. Vietnam War, space race, social programs, all of it cost money, lots of money, and instead of raising taxes or slowing down, the US just printed more dollars. By the late 1960s, there were way more dollars circulating in the world than there was gold sitting in Fort Knox. Other countries noticed. France, led by Charles de Gaulle, literally started shipping their dollars back to the US and demanding gold in return. Other nations followed. The bluff was being called. On August 15, 1971, President Richard Nixon went on live television and announced that the United States would no longer convert dollars to gold. Just like that, the anchor was cut. The Bretton Woods system collapsed. The dollar was no longer backed by anything physical. It was just a promise, a shared belief, and everyone assumed chaos would follow, but it didn't. Here's the weird part. The dollar got stronger. Without gold holding it back, the US could print as much money as it wanted, and instead of running from the dollar, the world ran toward it. Why? Because there was no alternative. Europe was fragmented, Japan was rebuilding, the Soviet Union was locked behind an iron curtain, and every other currency was even less trustworthy than the dollar. So the dollar became the default, not because it was backed by gold, but because it was backed by something more powerful, the size and stability of the American economy. If you wanted to buy oil, you paid in dollars. If you wanted to trade internationally, you cleared transactions in dollars. If you wanted to park your wealth somewhere safe, you bought US Treasury bonds. The system didn't collapse, it evolved. And the US found itself with a superpower that no empire in history ever had: the ability to borrow in its own currency at almost no risk forever. This is called exorbitant privilege, a term coined by a French finance minister in the 1960s, and he did not mean it as a compliment. It means the US can run massive deficits, fight expensive wars, bail out banks, stimulate the economy, and the world just absorbs it. Because every central bank on earth holds dollars. Every multinational corporation settles contracts in dollars. The dollar is the financial infrastructure of the planet. It's not just a currency, it's a system. In the 1970s, after the gold standard collapsed, the US made a deal with Saudi Arabia. You sell oil in dollars and we'll protect you. The Saudis agreed. OPEC followed. Suddenly every country that needed energy, which is every country, needed dollars. The currency flows back to the US, which then uses it to buy more goods, or invest, or fund its deficit. It's a loop, and the US sits in the center. But here's the uncomfortable part. The system only works as long as everyone believes it works. Belief is a strange foundation for a global economy, and right now, cracks are starting to show. China and Russia have been trading oil in yuan and rubles. The European Union has tried to create payment systems that bypass the dollar. Countries are buying more gold again. Central banks are diversifying their reserves. These aren't massive shifts, but they're happening. When a country steps out of line, the US can cut them off from the dollar system. It's called sanctions, and it's devastatingly effective. But every time the US uses the dollar as a weapon, it gives other countries a reason to look for an exit. And right now, the world is starting to ask a question it hasn't asked in decades. What if we didn't need the dollar? The US doesn't have a good answer yet, and that might be the most important financial story of the next 20 years.